Hey there, folks. It's Wesley Eves coming to you again. I've got a quick story I wanted to share with you about commercial real estate, whether it's multifamily or whether you're investing in single family real estate or whether it's commercial buildings. I have an interesting story and it illustrates a really good point with making sure you have the right coverage. I was at a networking event very recently and someone brought up the question, well, what do you do? Like, how do you protect against if you got a fire in one of your units and it burn, let's say it burns the whole place down or just a few of them. Well, somebody somebody piped up and said something that honestly made me cringe because I'm the insurance guy. He's like, "Yeah, I hope the place burns down." And I'm like, "Okay, dude, no, don't hope it burns down." His point, he was saying that kind of exaggerating simply to make a point. It's not that he hoped they burned down. It's that he knew that if they did burn down, he was going to be fine. And the reason he knew he was going to be fine is because he had the right insurance. He had actually had a situation like that before where he had a home burned down because of an accident from the tenant. And it turned out to actually be, in the end, a better product for him to be able to lease out at a higher rate because of what had happened than he did before. But here's where the rubber meets the road on that. So he had a home, the home burns down, and you're thinking as a real estate investor that if you've never been through that, that could possibly be a worst case scenario for you. You lose your asset. You don't have tenants who are able to pay anymore. So if you have the right insurance, no matter if it's a 1 to 4 family property or whether it's a multifamily property or whether it's a commercial strip center or office building, whatever it is, commercial, it doesn't matter. If you are a landlord and you have rent coming in, if you have the right kind of insurance, here's what's going to happen. You have to make sure that you have replacement cost coverage. So that's the first big thing, have replacement cost coverage. The second big thing is you want to make sure you have adequate limits, okay? Now, not how much you paid for the property, not much how much you think you can sell the property for. You want to make sure that you have it insured to a reconstruction cost that is accurate, okay? So do an accurate reconstruction cost estimate on your assets. Make sure that you get an accurate number for that, and that's what you use to insure it. Now, this, from an insurance perspective, this is something that you should do every year at renewal. In reality, some people do it every couple of years, but it is something that you want to make sure that you have done correctly. Here's why you want to make sure that you get that done. If you don't have it insured properly, if you don't have it insured up to a certain percent of the actual reconstruction cost, there are going to be something called co-insurance penalties when you have a claim. Those co-insurance penalties can drastically reduce the amount that you are paid in the event of a claim. So you want to make sure that that doesn't even come into play, that the only thing that you're responsible for out of pocket is your deductible, and that's it. Make sure that your deductible is something that you can handle, something that is within your capability to be able to cover through cash flow of other things or through money set aside that you have in reserve for these types of things, whatever it is, however you decide that you want to handle it in your situation, make sure that you can. Okay, so set those deductibles properly, make sure that you have replacement cost and that the limit of your replacement cost coverage is high enough. See, and there are policies and you may have 80% co-insurance, 90% co-insurance, or you may have that waived, but that the carrier requires you to make sure that you are covering it to 100% of the actual replacement cost coverage. So those are very, very important things, and they can drastically reduce your payout. The second thing is to make sure that you have lost rent coverage or loss of income coverage. This is something that's really important because when you have a physical damage claim that prevents your business, and that's exactly what it is. If you're a real estate investor, those houses or those buildings or those apartment complexes, whatever they are your business. So make sure that you have the revenue of the business covered. Otherwise, you could lose the whole thing. I mean, if you don't have enough runway with your personal reserves or the reserves for your business, the business goes out of business. So make sure you have adequate either loss of income if we're talking about a commercial product, or whether you have loss of rents coverage if it's like a single family or a duplex or a triplex, something of that nature. But make sure you have enough um, loss of income or loss of rent coverage to cover the amount of time that it may take to rebuild back. Here's what happens if you have those things. Here's why the guy wasn't really concerned about having a fire in one of his places. Because, well, you've got an asset out there that's who knows how many years old. It may be a new product, it may be an old product, but whatever it is, you've got an aged asset out there, and you've had tenants in that asset. Maybe it's not in quite as good a shape as it has been in the past. If it burns and you have the right kind of coverage, you're going to get the cost of replacing it, and you're going to have a brand new unit there. If it's a single unit, if it's multiple units that burn, you'll have several brand new units there that will be paid for from the insurance. Then you have the lost rent coverage. And so really, if you were properly insured, you don't have a reason to worry about that as being a risk. No matter if it's a fire or whether it's a lightning storm or whether it's a hurricane or tornado comes through and destroys it, if you have the right protection on your asset, you don't have to worry about loss of revenue. Your business can keep rolling just like it has been, hardly without skipping a beat, with really only your deductible to consider there. So make sure you have enough in reserves for that. But just, I hope you got something from this, and if you're investing in real estate, no matter what type of real estate it is, understand you can get good coverage. Just make sure that you have the right limits, the right type of claim settlement, and that you have the right types of coverage for your situation. That's all for today. Y'all have a good one.